It's a bloody disgrace. It's a bloody disgrace.
But that's what you have to do in life. You've got to back yourself. You've got to back yourself in your own decisions. Because if you listen to the negativity, they'll make you change your mind. And they're not qualified.
Now, risk management by far is one of the most important aspects of Forex trading that you need to stay disciplined with. And take it from someone who had struggled for a long time with this, and I still have slip-ups here and there. It is something that takes huge discipline, and it is true that Forex trading is risky if you don't use proper risk management. So in today's video, I will be sharing with you 3 easy and straightforward tips on how you can effectively use proper risk management in Forex to become more profitable. Keep watching. What's up guys, Candace B here. Thank you so much for coming to my channel. Welcome back to my subscribers and welcome to my new ones. How y'all doing? How's life? I don't know who needs to hear this, but cut those toxic people out of your life right now. That was kind of random, but I said what I said. So yes, as I was saying, risk management in Forex trading takes a lot of discipline. So the best, I guess, analogy I can use is to compare this to eating healthy. So obviously we all know that eating healthy is beneficial and it'll prolong our life, ideally. But of course, there are many temptations like pizza and burgers and my favorite nachos. And these things make it so hard to stay disciplined. But of course, if you stay disciplined, then you will eventually see some reward from it. Now, this may take a while because everyone's body is different. However, if you stick to eating healthy, in the long term, you will experience weight loss, lower cholesterol, higher energy, and overall just a better life. So this is similar to how risk management in Forex is approached. Now, we all know that risk management is the best thing to do because it'll help increase your chances of retaining your profits, which as a result then builds your account. But there are many temptations such as overconfidence, which might cause you to increase your lot sizes, over leveraging your account, trading anytime you want, and not using a stop loss, which results in improper risk management. But like eating healthy, if you avoid these temptations, then the rewards are endless. So let me give you 3 quick tips on how you can effectively manage your risk and become more profitable in Forex. Now, as a disclaimer, of course, like I say in every video, these are my opinions. These are my personal tips just from experience. I know that there are many different ways to manage your risk, but I'm just sharing with you 3 simple tips in my opinion that will help you and are easy to implement and use just with a little bit of self-discipline, a little bit. And also make sure you watch until the end of this video to get a little treat. So my first tip on how to effectively use risk management to become more profitable is to be realistic. Now, when I say this, I mean that you have to set expectations that make sense to you. Because in my opinion, if you are not realistic with the types of risk and return that you can obtain, then this of course will decrease your chances of building up your Forex account. For example, let's say you are working on your winning percentage. You want to increase it, you want to get it to the best that it can be. However, you're risking 5% per trade. Not the wisest thing to do. This is because you are still on a learning curve. You are trying to gain consistency. So if you're throwing in high risk percentage, then this is obviously going to be detrimental to your account. And that is just so unnecessary. So by evaluating your trading account and your winning percentage, you can come up with a realistic plan on how much you should be risking per trade. And as a side note, if you're curious to know how to calculate your winning percentage, just take the amount of wins in a given amount of time and divide it by the amount of trades overall you've had in a given period of time, and then multiply it by 100, and boom, that is your win rate. And by the way, here's a little secret. You can lose more than you win and still be profitable. It depends on your risk management. That being said, my second tip on how you, yes, you, can effectively use risk management to become more profitable is to risk less than you want to gain. I hope this is kind of obvious though, but just to clarify, when I say risk less than you want to gain, that's basically what I mean when I say that you can have more losing trades than winning trades and still be profitable. For example, because we love examples, honey, let's say we have a risk reward ratio of 1 to 3. So we risk 1% and our reward is 3%. So let's say I take 5 trades this week and I lose 3 trades and win 2 trades. So of course, if we do a little math, 1% risk times 3 losses equals 3% loss. And what the hell? I just had a brain fart. And 3% reward times 2 wins equals 6% gain. So if I subtract 3% loss from the 6% I gain, then my profit is 3%. This is why risking less than you want to gain is an important and, in my opinion, quite a helpful concept. And if you haven't noticed, I've been talking in percentages, and that's because using percentages instead of, keeping track of monetary amounts really helps you to gather accurate data to track your process when it comes to Forex, and also helps you to treat Forex like a real business. Because if you are able to gain a consistent percentage of return every month and you keep your risk percentage low, then eventually as your account grows, your lot sizes will grow, and then everything will grow and it'll just be great, okay? It'll be great. So be patient with yourself and focus on percentages. Last but not least, the third tip that I will share with you in terms of how to effectively use risk management in order to be profitable is to keep your risk consistent. And this is literally just piggybacking off of what I was just saying. But I feel like if you keep your risk consistent, this is really helping you to simplify Forex as much as possible. And that is the goal. You want to keep things simple when it comes to the markets. And it'll also help you to build really good habits and really strict discipline. So we're going to use another example, okay? So let's say USD JPY is looking really extra beautiful today. So you decide to trade UJ. But because it's looking so beautiful, you're really confident about this specific trade and you want to take a buy because you know for a fact that the US dollar is going up and the Japanese yen has no chance. So you risk more than what you're used to risking because of this confidence on this specific trade, and it goes against you. So you're in the trade, you're watching it, you're waiting, kind of reverses on you, but then boom, it goes up and it hits your take profit. Amazing, right? I don't know. It's not necessarily a good thing because now, even though technically the trade was in your favor and you won the trade, this might give you a false sense of hope that now you can just risk whatever you want and that you will always win. And that's not the case. And I'm kind of directing this towards the newer beginner Forex traders because I know how it is when it comes to developing psychology. A lot of new traders overlook the fact that trading psychology is probably the most important thing that you can focus on first, as opposed to opening a Forex account and depositing money. Like, who cares about that? You need to focus on your trading psychology. So that being said, I know that, a lot of newcomers, new traders, they don't focus on Forex psychology. So they're more likely to, for this to happen and then for them to gain this false sense of hope that will eventually just screw them over in the end. And the seasoned traders already know that the market will humble you. So really, keeping your risk at a set percentage based on your account balance will really be beneficial because it keeps you level-headed, it keeps you emotionless, you know what you're expecting, and it'll help you not be a nervous wreck, because who wants to be a nervous wreck? Like, not me. And really, especially for beginner traders, you don't want to have these impulse decisions that cause you to risk more than you normally would. And really, unless you're at that level where, you're a seasoned trader and your trades that are aggressive are very meticulous and specific to your plan still, then just avoid being aggressive and avoid risking more than you're supposed to. Trust me, it'll just save you a lot of stress. So if you have made it so far in this video, thank you. I love you. You're a real one. And go ahead and like this video if you have enjoyed the content so far. As a little treat, like I said, I am going to share a bonus tip that is so mind-blowing, you will not see it coming. I'm not even joking, no cap, you will not see this coming. Like, you will not see this coming. So the bonus tip that I will share with you on how to effectively use risk management to become more profitable is to admit when you are wrong. Just let that sink in for a second. I'm gonna give you a few seconds. I'm gonna give you a few seconds to just rewind it. Rewind what I said. I'm gonna give you a few seconds. Man, oh man, oh man. This is a huge thing to grasp, honestly, because as humans, our ego naturally tries to convince us that we can do no wrong, that we are always right, and that the decisions that we make on our own free will are perfect, and if anyone tells us otherwise, then they are the wrong ones. And I know we've all been in situations where our ego got the best of us. But in Forex, you gotta leave that ego at the door. I'm telling you. If you don't, again, the markets will humble you quickly. And honestly, as humans, we all must understand this about our ego, because if you are the type of person in life that refuses to admit that you are wrong, then being profitable in Forex, becoming profitable, becoming consistent in Forex will be a long, rough, and rigid road for you. That was a lot of R's. Please take it from someone who didn't even realize that they had an ego until the market whooped their butt many times. Talking about me. I had to learn the hard way over and over and over again until I finally just had to ego check myself and realize that if I'm not able to admit that I am wrong, then there will be no way that I will see success when it comes to Forex. Not at all. And even in life, honestly. I always kind of mention that a lot of things in Forex taught me about myself, and I bet a lot of you can even relate. And this is exactly why I wanted to make this video in the first place, because I feel like risk management is really often overlooked, especially at the beginning, and mistakes are made that are so unnecessary. And it's just kind of like people will think, oh, I'll be fine in Forex, I'll learn how to trade, I'll figure it out, and I'll be fine, and I'll make 5 figures in the next couple months, don't worry about me. And they don't even realize that there's so much work that you have to put in, especially when it comes to risk management. Because of course, a big part of remaining profitable in Forex is knowing how to manage your risk properly every single trade. Beginner, advanced, whatever the case may be, we all have to do this. Like, the best of the best traders do this. And if I'm hearing that the best of the best traders are doing this and, very actively always managing their risk, writing down their trades, reflecting on why they've lost, stuff like that, then obviously new traders and other seasoned traders should be copying in that direction. They should be following that path. Even by you choosing to stay out of the markets is effectively managing your risk. Deciding to stay out of the market for whatever reason, let's say, you're frustrated, you had a bad day, you broke up with your boyfriend or your girlfriend, or let's say you even had a great day and you're extremely, extremely happy and emotions are just going through you and it's just crazy. Honestly, deciding to stay out of the market in those situations is way better than just jumping in the market because you feel like you need to. You are helping to manage your risk by staying out of the market when you know you are not 100% ready to be in the market. So that is all the information I will be sharing with you today in this video, guys and gals. I hope that, you were able to take a little bit of information. I hope something resonated with you, something reminded you, this video came at the perfect time for you. I hope that it helped you in some way, because that is always my goal with these videos. When I sit down, and I talk to myself, and then it ends up going, you know, on my YouTube channel, and then it goes to you guys. Like, I really hope that it helps in some way. Even if it helps one person, like I always say, I'm happy. I'm happy. I'm happy. And that being said, please like this video if you enjoyed the content. Comment down below. Let me know how you felt about it. Let me know, you know, some of your risk management strategies or what you've taken from the video that you will be able to implement to your trading plan. And of course, please subscribe so you don't miss any of my future videos. And in the meantime, go ahead and check out some of my other videos as well. Thanks again for tuning in, everybody. And I hope you have a phenomenal, physically and mentally healthy day, week, and life. Bye.